Hello, everybody. This is Mickey Mao with CartoonMoneyPrinters.com. It is February 4th, 2025, Friday. Um, Market's a little bit red today. I am joined by Astronaut Toad. Why don't you go ahead and say hey?
Hello, everybody. How's it going?
Yeah. So, so the market, we were bleeding today, which could be kind of forecasted with the tariffs and stuff. So,
Yeah, it was a rough Friday for the stock market.
yeah. Why don't we go ahead and take a look at that then? I'll let you
Yeah,
take it
so
from here.
we dive into the technical analysis.
Yep. Yep.
Basically, this has been March has been a crazy month. It just closed. The candle just closed a few days ago. Today's April 4th, so March is done. And as you can see, the March candle for Bitcoin is a very bearish, scary doji. That is a shooting star, and it is not looking good. I was saying in the private Discord earlier, if you if you look at this chart and you don't expect more downside, you are just delusional. I'll put volume up here. Uh, we have our money minter D indicator that has printed I believe it's a bearish divergence on both money flow and yeah, see that? That is, if I draw a line there, that's given us just the faintest hint of a bear divergence on both money flow and the momentum. And we've also got a bearish divergence on RSI. So like this is going down. We have our 2025 forecast here that I made back on February 1st. And we basically have just chopped into the fair value gap here. This thing, it's so far these candles are closing like right at or above. Like we don't have a body of a candle below this 50% of this fair value gap. So I might expect somewhat of a bounce at some point during April. But overall, this is still just super bearish. Like this divergence and then this candle here, a divergence as we were talking about teaching in the private Discord, bearish divergence or any divergence is worth 10, 15 candles at least. So from this high, we've got, let's do 10 candles. We've got until November of this year for this bearish divergence to remain valid on the monthly chart, okay? So if we spend between now and Thanksgiving just grinding down, you heard it here first, folks. That's possible. That is what this massive bearish divergence is forecasting. So that's not very bullish. However, we've got to look at the smaller time frame charts, and we have to compare Bitcoin to the NASDAQ tech stocks because there's some really interesting stuff going on. So I'm going to hide my monthly forecast, my overall forecast. I'm going to jump down to the weekly time frame, and let's look at this crash on the weekly time frame. Oh, hey, look at that. My forecast is playing out almost exactly. Wow. So here, okay, let's get this over with real quick. I'll make the forecast. Here's the old all-time high. It's right at the golden pocket. So just watch this level, folks. 74.4 thousand down to 72.4 thousand. Even this candle right here, this weekly candle that still has 2 days left in it, uh, this is aiming down still. Bearish market structure, okay? So that $74,000-ish target is where we are going to look for the crazy good longs while everyone else is terrified and dying. Okay. But here's the thing. Let's look at the stock market. I'm going to pull up NAS 100. The stock market, as you can see, is just absolutely destroyed. And this is a very different chart. Something's not right between Bitcoin and NASDAQ. Okay, let's go back to BTC. So when you see that, look at how strong Bitcoin has held this exact level. That is interesting. And that means we got two. I always want to try and give two scenarios. I want to prepare people for either case. Okay. If you're ever hiring a technical analyst and they only ever tell you, oh, it's going to go up or it's going to go down, fire that technical analyst immediately. Join a different Discord or Telegram group or whatever. Stop paying for one opinion. Okay. You need to be prepared and say, okay, bullish, bearish case, what do we do either way? Okay. So here's the thing. Bitcoin has held this level really well. And I'm going to redraw these fibs so that you know where and how I'm doing it. I'm pulling from this low because this has got two down closed candles. And then I'm going to the all-time high. And then I'm using my Fibby tool that has this painted in. So the 50% fib retrace has held, but we're still above this golden pocket. Even if you drag this down to this low, you're still, the 50% is holding. And the golden pocket, the 618 fib, has not been touched yet. Okay. That is very telling. We should be paying very close attention to that. That's interesting. And what it means is, relative to the stock market, let's go back to the stock market. The stock market is absolutely gone. We'll mark this out. Okay, so there's this low.
Do you want to
the
just
NASDAQ
add the
and
NASDAQ to this chart?
it'll have gaps, but let's see. The gaps will jump. Gee.
Make it red for all the pain.
Yeah, it's not going to really work out the same. Basically, I just want to drive home the point that the NASDAQ has trashed itself all the way back to these lows, okay? Whereas Bitcoin is holding above this old range that it did from March of 2024 to October of 2024, okay? The NASDAQ, however, let's see, where's March of 2024 is around here. And then October of 2024 is here. So the NASDAQ has crashed well below what Bitcoin was doing. And so it means one of two things. Here's my point. Here's what I'm getting at. This chart, this candle on the NASDAQ that just closed, this weekly candle, this is like, you got to be delusional to not think that it's going to go lower, okay? That is one of the, like, it's aiming straight down. The plane is flying right into the side of the mountain. You've jumped out of the airplane with no parachute, okay? That's how straight down this chart is. So it's going to go lower. There's some liquidity somewhere down here. But anyways,
Let's
I had drawn a path.
If you don't mind, let's bring it up to the monthly and really zoom out on the NAS. And like,
yeah,
give it way more time. Like, zoom back to like 2014.
this is the thing that I posted in the private Discord. This is what I'm seeing. So here's 2015, 2014, back when the Nasdaq was down at 4,000, and you can see it have this crazy blow off top. The dip from COVID is tiny. The dip from, the economy recession being Biden's fault is only 37% top to bottom, 32%. But notice how these crashes visually pale in comparison to these massive, terrible candles here, okay? This is a gigantic red candle, quote unquote red. And what that means to me is we're doing some sort of dipping below this liquidity, whether you like it. It's just a false hope to expect it to bounce and not come back down to test this level or break through it, okay? So I drew this hopeful, thinking, yeah, we might get a bounce. This is a super optimistic bounce getting up this high. But my point is this. The NASDAQ has crashed down so hard that it's going to find solid ground sometime in the next couple of weeks. It has to find a bounce point, okay? And it might look differently. It might do something like this. Okay. And then it might go up or it might go down from there. As soon as you see the stock market find any sort of footing, solid ground, that could be Bitcoin's opportunity to behave like a altcoin season for the tech sector. Because think of it this way, as soon as the tech stocks find any sort of solid ground, what is the most degenerate gambling part of the tech stocks? It's crypto. Therefore, I think if the stock market finds any sort of solid ground in the next, oh, my internet's dying. You guys still there?
Yeah, we're good. We're coming clean.
If the stock market finds any sort of solid ground in the next week or so, that could be Bitcoin's cue to launch, because it has not crashed as far. It is showing strength. And I think that the narrative for that is because how is Bitcoin affected by tariffs? It's not, maybe it is affected by tariffs, but it's much more of an ambiguous, vague kind of effect. What we're seeing is US tech stocks are dying because of this tariff situation.
Yeah,
but crypto, Bitcoin in particular, is kind of falling. It's not crashing. It's not dying as much.
I'm going to add something to that. If you pop over the NAS and like really zoom out on the monthly.
Okay, so first I want to measure this. Bitcoin is down 30% on the nose. Exactly. I love that Coinbase spot chart. They always have these dead giveaways for the weird numbers, weird whole numbers. That is wild. Okay. Comparatively speaking, this looks tragically worse, right? But top to bottom, the NASDAQ is only, quote unquote, down 22%. That's obviously a massive tumble. That's $5,000 wiped out of the NASDAQ price. I forget how many trillions of dollars have been wiped out of the stock market recently, but it's a gigantic number. Anyways, what were you going to say about
the so zoom out, keep zooming on the monthly. Okay, so this huge, massive bump to me, like, it doesn't look like the healthiest market structure. I think that this is tech like these tech sell-offs that we're experiencing now, I think they've been shouldering the stock market. So
Yeah,
as we saw booms and busts in the 90s, I'm not sure if this goes back into the 90s. If we could zoom in back there into the tech crash back then. You may only have the 500 candles.
I've got the NASDAQ.
Okay, yeah.
So here's the 90s, 1995 at least, and then this massive gap in the dot-com bubble pop.
Measure that drop in the that crash, the
Oh
dot-com
yeah,
crash.
we measured this before. What was it? 80, 82% top to bottom, 83% top to
Yeah.
bottom.
So I think
That's pain.
the main reasons why these are happening is because these tech stocks are like, we got to remember that stock trading is
AI.
pure speculation. We have to remember that and
Yeah.
keep that in mind whenever you're looking at stocks. These are speculative positions that people are taking in companies. And so that's why the tech sectors and all these .com, all these technological things end up shouldering the majority of the growth, is because people are speculating that that's the way the future is going to go. So,
Oh, dude, I got bad news. We gotta retest this.
I don't think we'll get that low. There's other things in the market that have definitely blossomed with the tech stuff, but I mean,
Yeah.
you got Spotify.
This I like to see.
You got
Yeah.
Spotify.
This is where I like.
Go ahead.
One of the main reasons why I don't think the stock market will crash all the way to $4,000 is we have some very fundamental respect of these golden pockets. So here's the thing that I notice when I look at crashes: how perfectly respected is a golden pocket. The COVID crash, it respected this golden pocket. No candles, closed below it. It wicked below, didn't touch the 786. And then the recession in 2022, almost perfect respect for the golden pocket. What this means is whatever billionaires had infinite money to throw at the market, they defended this level. We should be able to safely say, unless we get a Great Depression level event, like 10 years of down, or we get World War III, we should not break below 10,000, because this is a golden pocket. However, here's the thing I want to point out. I'm gonna drag this so that it's a little bit more. Look, by comparison, look at this pullback here. See, here's 3 down close candles, but they don't even get to the 50%. That, to me, is a huge red flag, because what it means is there's got to be liquidity in these gaps. This right here, right above that 50%, it didn't even, this fair value gap didn't even get wicked by this dip here. So watch this. Fair value gap bullish. This, we haven't done measured moves yet. We haven't talked about measured moves yet, but a measured move is, say this is the head and shoulders pattern. And where's my liquidity zone here? Right around there. If this breaks, here's what you do. You drag, I'm going to hold down Control or Command, and I'm going to click and drag this measured move to duplicate it. That is scary, but it goes right to this golden pocket that we missed and never collected. So there's got to be liquidity hanging out right around here. You've got some support and resistance going on. Look at this high. You got these candles closing there. You got the candles closing there. And then they're respected from above and below a little bit. Like, that's pretty terrifying for any billionaire who's got money in the NASDAQ. $12,000 NASDAQ after it got to 22,000. But the technical analysis shows that that's possible. Okay. So watch out.
Yeah, so I think that like to finish my point here, we have very overvalued tech stocks, and they like, what does Spotify actually do? Like, what does it actually produce? Um, they were just
But even then, the tech stocks that do produce value, their price to earnings ratio is through the roof as well. Like Tesla, the price to earnings ratio is bonkers.
that's
You could argue that they're a decent company. I don't know,
that's
but
different.
their
But
price to earnings ratio is bonkers.
we looked at
That
things
means
like
the stock is
Peloton the other day. Like there's a bunch of products out there, stocks out there that really I feel like shouldered the entire market, and that's the reason why it got so high. Like it's ridiculous. Like 22,000 in a matter of 20 years is nuts. When it came from just like
yeah,
what, like 6, 7.
yeah. This is definitely a bubble, and bubbles pop, and head and shoulders pattern is what we're looking at right here.
Yeah.
I don't trade patterns usually. Like, oh, head and shoulders pattern, bear flag, bull flag. Like, I'm not a pattern trader. But when it happens on the monthly chart, you pay attention.
Oh, absolutely. Yeah. There's more
People like
weight
to
to
say,
that.
"Oh, price is fractal. It's the same on every time frame." No, it isn't. What you see might be fractal, and you might see the same patterns on every time frame, but you better believe that the 1 month time frame is more reliable in terms of an engulfing candle or this or that doji. You better believe that the monthly time frame is more reliable than the 1 minute time frame. Otherwise, we would all just be trading the 1 second time frame, and we'd be rich by now. Okay. So this is the overall analysis. Let's go back to Bitcoin. Is as soon as in April, probably as soon as the tech stocks find some sort of solid ground, crypto's gonna go bonkers. That's my forecast. Okay. It's the same thing that happens between Bitcoin and altcoins. Bitcoin crashes, altcoins freak out, but as soon as Bitcoin finds solid ground, it's altcoin season. But yeah,
I
we
think
had
there's also a decoupling of industry, manufacturing, and the tech sector, including crypto. I feel like the stock market isn't reflective of the broader economy, um, as much as it has been in the past.
yeah, on the one hand, it's a mix because like you have companies that are like own social media or news or whatever, Facebook, Twitter, Apple. Um, and they're relevant, they have value. But on the other hand, you have companies like the AI companies or Nvidia or whatnot, and Apple and you know that that's absolutely a bubble, just like the dot-com bubble, that is bound to burst. So honestly, right now, if I was a long-term investor, I would start throwing money at all of the stock market because the massive crash is, hey, time to start dollar cost averaging in.
Well, that's a very good
But you
point.
want to diversify. You do not want to just be throwing your money at the NASDAQ. You
Yeah.
definitely want to be buying the S&P 500, the Dow, gold, silver, platinum, whatever. You should be averaging in, but diversely.
This is
That's my
not financial
overall,
advice.
not financial advice. We are a bunch of degenerate crypto gamblers here, but if you're thinking of what to do with your 401k, those two insane Nasdaq candles crashing down are just begging to be bought up.
I see. Here's what I see as far as this. I see this as a massive opportunity, and the barriers for entry for normal people to actually get positioned into the market when we hit the bottom or near the bottom or even dollar cost averaging. This is going to make people's retirements in 10, 15 years.
Yeah,
And so,
yeah,
but
exactly.
before, it's like, if you're a 20, 30, 40 something year old and you're looking at the stock market and you're like, I can't buy this. Like, it's going to, like, it can't keep going up. This opportunity is probably a once in a generation opportunity for people to actually get past that barrier of entry and actually get into positions that will make them wealthy like the boomers have. It may not be as much as the boomers have, but it's the beginning of your retirement. This is a great opportunity to essentially start talking to a financial advisor and positioning into the market for the average person. The
Yeah,
people that are affected by this the most isn't your average Joe. You know.
yeah. It's you're either if you're about to retire next year or this year, then you're affected.
Yeah.
Other than that, other than that, throw money at it, start throwing money at it now and walk away for five
Yeah,
years.
not financial advice. I would recommend talking to a financial advisor, but this is a golden opportunity. That like, when else are you going to see a candle like that in the NAS? Unless it's World War
Yeah,
Three, or a meteor impact that just hit the planet. You know what I mean? Like something
yeah.
absolutely devastating. And America being the
And
leader economically in the world, like there's major players that are always going to be looking towards this market.
yeah. And this liquidity, look at that perfect razor edge. It's just so perfect. It's too perfect. See how these candles are just lining up like that? Like when you draw a line and it lines up so perfectly with the other candles. See, look, I'm aligning these two candles here, and look at how dang spot on it is with the all-time high. That means that the big players are playing, okay?
Yeah, and
This wicked above and got absolutely slapped. So this is the line, this line right here. And we can also do some fancy stuff. Let's see, what are our usual tools? We do the pitchfork. I love a pitchfork. Oh, hey, look at that. See how that lines up almost perfectly? Yeah, I don't see it. A pitchfork just really confirms the trend for me. There's not much else to do with that. I do like using a Gann fan though. There is a very special way to do this, but we're not going to go into that today. I like to just see what lines up and you'll see stuff like this. See how this line is respected there, and the other lines are kind of respected here and there. What that means is if this gets a strong close above this downtrend line, then the next stop is way up here. So this is me Babe Ruthing the market again,
mhm.
which I think I've been right enough times over the last year that
Yeah,
uh, some people should be taking notes, even if you're a degenerate gambler and this is not financial advice.
yeah,
This 14% bump or 12, 13% pump goes right up to that liquidity level. See this level here where there's all this resistance. That's interesting.
there's something you
That right
mentioned
there.
earlier that I thought was really apt. Bitcoin being differing from the Nasdaq and the broader market. Um, I think that liquidity is leaving the broader market, and it's going to try to find another home. And with Bitcoin's recent pump, they're like, shit, if I could get a 30% gain on my portfolio, why wouldn't I? You know what I mean? Even or even a 10% gain on my portfolio. Like it'd take me years to do that on the NAS.
Yeah.
So
Yeah.
I think that liquidity is exiting from the broader stock market, and it's gonna find a
Yep.
home somewhere else. And honestly, looking around, of course, gold and silver in times like this, that's an absolute that fallback for everybody. But here comes a new player, Bitcoin. You know what I mean? So I really think that we're gonna start seeing a lot more volume. And I think your assessment about Bitcoin having strength and bouncing and doing a rally, I think that's a valid point. I really I see it too.
Look at this point of control, and this lines up. We're below the point of control, so that's very bearish. Like I suspect that what comes next is a takeout of this low.
Do another fixed range volume profile at the last range, the range before this one, and then we'll see. Like, it's obviously getting rejected from the value area low.
You mean this range just right here,
No, left.
or
It'd be to the left. You had the big range above.
the old all-time high?
Yeah. So that this is what I do is I do a fixed range there, and I'm like, all right, if it gets accepted back in that range, there's a lot of it's there's a lot of business down there,
Yeah.
liquidity that's already been traded. So I don't think it'll
This
be.
is an empty zone. Here's a note along the lines of what you're talking about. This is an empty zone that has never been inside the value area. So that could be why we are trading. That could be why we are trading in this range, is we're between the two value areas. And that could be telling.
Yeah,
Let's
price
see, when it
price is gonna
left
want
that
to eat up in
range.
this area. There are bids down there that people want filled. There's liquidity back down there.
This drop to this range is a little bullish. See how we're getting to, like, this might be this weekend. Like, this might be it right there. If this over the weekend, because the stock market is closed and stock market just went in free fall, so crypto's going to be confused. So it might dip and grab liquidity below this low before it can close solidly above this level. But right now, it is at the point of control. It is at this strong trend line. It has bounced off of this value area low. Lots of wicks down here. That's nice. Like, this could go either way. And everybody should have an idea. Oh, look at that perfect touch of the golden pockets there. Yeah. And this lines up with that. Honestly, I want to be optimistic and say that it'll break this line over the weekend or by Monday, and then it'll rip up to this liquidity zone, the point of control up here. But we have to be aware that, especially if we go down the smaller time frames, if you see some bearish divergences printing here, then it's gonna want to grab this low here.
And it's gonna fill in that range. Honestly, I'm more towards the more downside. I think that
Yeah.
range is like there's price to be traded there. It's gonna want to hunt for that.
Yeah.
I'm kind of curious. Let's take a look at gold and silver.
Yeah, look at this.
With
Oh,
that
man.
dump on the NAS, I'm kind of curious to see like what happened with if people were going to a more secure asset.
Here's something interesting before we move on. I always like to see this because it's just really wild and insightful. We drew this red dash line on the 1-day chart, and yet look at how well respected it is on the 5-minute chart. So clearly, there is a big player using this line to sell or go short. And what that means is when you get a break above this line and a strong close, this is the 5-minute chart, but if you get a break above this line and a strong close on a 4-hour candle, a 1-day candle, that means that whoever had millions of dollars pointed at this trend line is done doing what they wanted to do. And then it's game on, because that's when they change their mind or whatever. They've stocked up, they've bought a lot down here, and they're just letting it rip. So when you see a big strong close above this level, that's when it's game on. Ouch. Gold took a plunge.
That's interesting.
Well, see, the thing is, gold has been absolutely ripping because of this tariff situation and the geopolitical whatnot, the uncertainty. Gold is just the eternal value. It's the original, you know, it's the original asset that holds value well. So this one little weekly candle closing down, yeah, it's a bit of a reversal candle, but oh no, how low is it going to go? You know, you got this strongly defended low here. Maybe it gets down to 2,500. Probably finds support if it gets down here. You've got this range that's kind of an empty gap. But that's not that crazy of a drop, considering, I guess it is pretty bad when you look at it, but I don't know. Considering how strong gold has been, oh yeah, we got bearish divergences, triple bear div on the weekly chart. That's never good. Money flow is still going up though. There's no divergence on the squeeze starting. If that yell at me, guys, if that says A++, yell at me, okay? Because we got to trade. I've got an alert on the Bitcoin 1-minute chart. Anyways, the daily chart, still no bearish divergence on money flow, but a big strong bear div on momentum. So yeah, the gold is gonna take a hit as well. But the thing is, during a recession or a war or whatever tariff situation we've got going on, gold will behave similarly to the whole broader market. Like, it will crash, even though it is the invincible asset. So you have to expect it to drop a little bit. But it's such a good long-term asset that almost any time is a good time to buy. Unless you're literally just ripping all-time highs, any time is a good time to just be DCAing into gold. Again, this isn't financial advice because I'm just a degenerate gambler.
What? Yeah, I was gonna ask you about like volumes and stuff. I'm looking at my war list.
That's a pretty big sell-off in terms of volume. But then again, we're looking at a bit of a bull div here. Honestly. I think we're in a similar situation to what I was saying with the stock market versus Bitcoin. It depends on what happens over the weekend with crypto, because that trades 24/7. If crypto starts to rip, then on Monday when the market's open, or Sunday afternoon, the stock market might bounce a little bit and gold might go shooting up to all-time highs. Who knows? But that's going to print, if this holds, that's going to print a nice bull div on the 4-hour chart.
I would suspect that people are selling off gold to pay off positions. That's probably what we're seeing. There's a lot of big players.
You're probably getting big players who have some of their money very smartly invested in gold or the Dow or whatever. They have taken profits and they are using this money to start gambling on, they're pouring it into the more riskier assets, because when the dust is all settled and the economy is back to all-time highs or whatever, and everything is nice and wonderful again, and there's no fear of what's going to happen with the tariffs or World War III, the stock market and crypto are going to be way more lucrative than gold. So people are now taking some money out of gold now that it hit over $3,000, and they're probably starting to cautiously throw it at the NASDAQ or Bitcoin.
Yeah, they're going to be looking for bottom signals. Or they might be doing DCA. Yeah. But I don't think that
anytime crypto or the NASDAQ shows signs of a little bounce, expect gold to dip a little bit and crypto to just go nuts. I joke about being a degenerate gambler, but that you have to treat other traders as if they are all degenerate gamblers and assume, what are they going to try and do when things are crazy and scary? They're greedy. They're going to try and make money when everybody else is losing money, just like, Warren Buffett or whatever, buying opportunity, blah, blah, blah. But there's some people who are doing that with leverage and too much leverage,
Yeah.
They are going to bet the farm that this one level is it. And they think the NASDAQ is going to turn around on a dime next week and go flying up. Those people are the ones who are going to get wiped out. So what we do is we wait patiently. We look for trades using our systems, and we trade it one day at a time, taking profits, covering our stop losses, and then hodling, so to speak, a diverse array of overall stuff. I see a bit of an interesting trend going on here. I want to see how this plays out. Yeah, see how that kind of held there? And this goes way down. That's interesting. Yeah, there's a very important line right there. Look at that. And we're below the line, so that's not good. But yeah.
Anything else you want to look at? Crypto fortunes? Do you want us to look at something?
I do need to check my hype.
Yeah, he asked for us to chart hype earlier. It's still
hype.
Yeah, it's still such a new
look at this. Yeah, the grind down. This is good news, actually. Look at that. So this grind down that we've been getting on the 4-hour chart or 1-day chart, like, it's kind of getting to the end of the grind. This range that had such strong respect, it's at the outside deviation of this range. So in terms of a downward channel, this thing has run out of room, so to speak. So this is ripe to rocket. What we do is we look at the divergence, we look for divergences, and we say that counts. That's a bull div. It hasn't rolled over yet, but it looks as if it's only a matter of time before that thing prints a bull div. You can't count, you don't want to count the chickens before they hatch or whatever, but that looks like it's printing.
Nice.
There's your
Yeah,
rollover,
initially
and
that's
give it one or
26.
two candles to roll over, and bam, you're off to the races.
You're kind of sounding like you're in the bathroom. What was that?
This bull div on hype is I mean, it's got to print
No,
in the next
crypto
day
forecast.
or two.
Yeah. No, I
Oh,
see.
yeah.
Oh no, I've said that I initially bought in at 26 or 25, and then I've been dollar cost averaging in, and my average is 15 currently. So
That's fantastic. Yeah, that's the name of the game. Is we have something that we think is a long-term good idea. We believe in the ecosystem that, you know, crypto is the future, blah, blah, blah. Decentralized is the future, I should say. And with that in mind, we just, you know, as much as we're willing to completely kiss goodbye, you don't want to get way too over your head into one asset. But however much you're willing to let go of for a good long while, you just keep dollar cost averaging in.
yeah,
I think if we go down the time frames, we'll probably see a pretty good, yeah, see that give a bull div right there. That's a nice bull div. And money flow's not in the positive yet, but it's looking good. Let us check the Astronaut strategy. The 1 hour chart. Ooh, this is looking good. Moment of truth. Oh, dude. All right, folks. We've got good news. Good news, everyone.
Good news.
Look at that P&L. $1,700 on $300 of drawdown. That's
Holy
only 3 trades,
shit.
though. I am not happy about that trade number. 100% profitable trades. Let's see if we can add some of this. Okay, that's more like it. 11 trades, Heiken-Ashi candles, absolutely destroyed. No good. 36% profitable. But I need